Today I am in Venice, California, not Venice, Florida. For those of you who watch my channel regularly, from coast to coast, from Venice to Venice. I've never been here before. Always heard about it, saw that it was a place, like a cool little spot to go check out. So I thought it'd be fun to come and shoot a video over here and even see it for myself as a tourist and just check it out. And so far, it seems like it kind of lives up to its promise. It's a pretty cool little spot to take a little walk through. Now I have some fascinating information to share with you guys today because these high mortgage rates, and I know for some of you who have been in real estate for a long time or have went through the 1980s inflation, recession, all of that, and saw 18% mortgage rates, think that today's mortgage rates are a nothing burger. And they probably are for you. But also, let's not forget that prices are a lot higher now than they were back then. The point is that these high mortgage rates are having such an effect on the economy and people's mentality with everything that it's literally affecting people's future life choices, okay? So Credit Karma, they recently did a survey from potential home sellers, and literally 2/3 of potential home sellers said that they're willing to wait out current market conditions and not sell right now. And the reason why this is a big deal is because a lot of the people who said that they would delay their plans to sell are actually millennials. 79% of millennials surveyed said that they would delay their future life plans and not sell their house because interest rates are too high right now. Holy moly, this Venice Canal house is listed for sale at $3.25 million. The current owner bought it back in 2019 for $2.75 million, and they actually rented the house in 2021 for $7,900. So that disconnect here in California of what it costs to own versus rent is just tremendous. And the Prop 13 tax bill helps you until you buy a house for $2.75 million, because check this out. In 2018, the last owner was paying $68.52 per year in property taxes, but when they bought this house in 2019, their property tax bill shot up to $33,183 per year. So that Prop 13 only helps you after you buy to kind of lock in what you're paying, and that's about it. But man, $33,000 a year property tax bill starting to look like Florida. Now, when we talk about delaying life decisions and choices, the reason why it's so important, especially for the millennial age group, is because this is the age group that is supposed to be having kids right now and being movers and shakers and moving up in the world and becoming the next CEO or starting their own business and things like that to really try to get ahead. But if they're going to be putting plans on hold for this, then that's not a good sign. And this is the things that they're willing to sacrifice right now in order to wait out this housing market until interest rates come back down. They're looking at things like staying in a smaller place, so they're not really happy with the size of the house, but they're going to stay in it anyhow just to wait it out a little bit longer. They're looking at delaying having children, and they're even doing things as crazy as continuing to live with an ex-spouse or partner, because it's so expensive to buy something somewhere else that it just makes more sense to wait this out and say, hey, we have a 3% interest rate, and even though we don't love each other anymore, let's just stick with this because it's the best thing we got going. So this is something that everybody has to think about. If this real estate market is that tight and these interest rates are preventing people from having kids or moving out from an ex or stopping people from starting a business, transferring for their dream job, this can have detrimental effects on our future population, our future prosperity level, so many different things that I think most people aren't thinking about with this, which is why I thought this was fascinating, because at first glance you would just think, oh, interest rates just affect, interest sensitive industries like real estate and the car market and things like that, banking and lending. But in reality, it has a far higher impact on human behavior than most people probably realize. Even myself, I didn't realize it was going to be this big of a deal. Now here is an interesting listing. They have this house listed practically at $5 million, but they started off asking $5.5 million, and here's the real kicker. The owner bought this place for $5 million. So they're actually selling at a loss, because by the time they pay all their taxes and commissions and closing costs, they're going to lose a decent amount of money on the sale of this property. And the reason that's kind of crazy is because they bought it back in 2019, before all the real estate madness began. So to lose money on a property you bought that long ago is kind of unusual, but that's what happens when you overpay, folks. The problem is, though, every time I see one of these stories, guys, they always tell people the same thing. And I have to come back and fight against this time and time again, because no one else is saying this, it seems like, except for me. Here's a quote from this story. Homeowners who are unhappy with their current housing situation, it may not be worth holding out for rates to fall. If they can afford to make the next home purchase while rates are where they're at, there will likely be a chance to refinance, right, to a lower rate down the road. Okay, yeah, at some point down the road, there probably will be that chance. But if you think it's going to be within the first few years of getting the house, it's not going to be the case, because most people don't put more than 8 to 12% down payment on any given property that they buy. Because people go in with such low down payments, they don't have much equity to begin with. And for the first few years of your mortgage, you're hardly paying down any of the principal. So if you think you're going to be able to refinance in like 3 years when rates do go down, or if they go down in 3 years from now, you're kidding yourself, because that's not going to be a reality for you. But literally every single news story says that you can refinance. Even Mr. Lawrence Yun, the chief economist over at the National Association of Realtors, he said the same exact thing in a different story that I was reading today when I was preparing this content for you guys. Same nonsense, okay? That doesn't work, guys. You cannot refinance if you don't have the equity to refinance. And even if you do, it might not be worth it, because you're going to have all these closing costs. You're starting over on a brand new loan once again. And, you know, refinancing isn't all that it's cracked up to be, unless you're going to be saving a significant amount of money. But, you know, going down from a 7 to a 6.5 or even a 6 probably isn't going to be worth the refinance and all the trouble and the fees and money that's going to cost you. Here's another interesting point from this story. These higher interest rates are deterring far more younger potential home sellers than older ones, okay? Because you had 79% of millennials saying that they'd be willing to wait on a sale right now and selling their current home. But when they polled the baby boomers, only 35% of them said that they would be putting their plans on hold to sell because of the high interest rates. And it makes sense, right? Because chances are probably many of these baby boomers have a house that's paid off and could probably take the earnings from that sale and buy another house in cash somewhere else, right? Whereas millennials in the same selling situation don't have all that equity to put into the next house and basically buy something for cash, and are still going to have to get a mortgage and are still going to be highly affected by these high rates. So people are literally putting their life on pause due to the high interest rate environment right now. And that just makes me think, like, we saw all this pent up demand of people buying homes, right? When prices were still fair and we had interest rates at 3%. And I'm starting to think that maybe we're going to see that same sort of behavior happen once again when interest rates fall below 5%, like it's predicted. Like when the mortgage interest rates fall below 5%, that's going to be the green light for people to list their homes for sale. And if you're having a swath of people all thinking the same thing and getting their homes out there and listing for sale, I mean, this is going to have a huge impact on the entire housing market. However, if it's slow and gradual and it's enough to meet the current demand, then it should be enough to keep prices high, right? But it sounds like there's a lot of pent-up demand for people to sell, and they're just waiting for interest rates to come down. It seems like that's the only thing they're waiting for. And if that's the only thing you're waiting for, when we see interest rates come down, that could be the deluge of inventory that we've all been waiting for. And coincidentally, it'll be right around the time frame, like I was telling you guys in my last video, when we might start seeing more foreclosure listings hit the market. So I think within the next 3 to 5 years, we could see a massive amount of inventory hit the US housing market. But of course, a lot of people are going to say, well, that's too far away. I can't wait that long. Can't put your life on hold forever. And that's fine. I'm not telling anybody that they should do that. If you think that buying right now is the right decision and you can afford to, and you find the right property, by all means, I'm not stopping you guys. I'm not telling anybody not to buy. In fact, I'll tell you right now that if you need a realtor to help you buy, or you need a realtor to help you sell your home because you don't want to put your life on hold, then go ahead and use my link in the description below, because I can get you set up with a real estate agent nationwide in all 50 states. It's a completely free service to you, and every time someone uses the service, it helps out the channel tremendously, and it's much appreciated. This is pretty cool around here, guys. I can't believe I've been to LA like 3 times before this and never checked this out. And I've always been very close to this area, but just never came through here. I thought we were gonna see like a ton of homeless tents and things in this area. So far, I haven't seen anything like that, so probably just not in the right spot for that, but hey, I'm glad we're not seeing that because it's beautiful right here. And if you are enjoying these videos and you want to see my channel grow, please subscribe to the channel and make sure you give this video a like. Now, a lot of people are celebrating, including the entire stock market, because we saw inflation go from 9.1% about a year ago to the most recent report in June, all the way down to 3%. And what they're referring to is the CPI. They're not referring to core inflation here, which is still a couple of points higher. I think it's still hovering around 5%, but CPI is down to 3%. And honestly, guys, I don't really care what they say about any of this, because I think it's all a bunch of baloney anyways. You know, we know these numbers are all cooked, just like the unemployment numbers, and none of it is real. But the reason I'm bringing this up is because a lot of people are celebrating prematurely, like, well, look, we're already at 3%, 2%'s right around the corner. But one thing people need to realize is that this fight against inflation is going to still take longer than most people realize, because according to economist Richard Moody, he's telling everybody that it's a lot easier for the economy to go from 9% to 4% inflation than it is to go from 4% to 2%. And even the Fed themselves right now is saying that they need to see prices come down a lot more than they're coming down right now to let off the gas on their fight on inflation. The Fed doesn't think we're going to see 2% inflation at least until 2025. So that means we still got another year and a half of sustained high interest rates. And whether or not they do another hike at the next meeting, I don't think it really matters, guys, because one thing I always keep in the back of my mind is that Jerome Powell said a while ago that it's not so much about what the rate is, but how long we keep the rates high for that has the biggest impact. So even if they stopped hiking right now and they keep rates where they're at all the way until the end of 2025, that's still going to have a massive effect on the economy for the next several years. And guess what? They're not happy with where inflation is at with housing and labor. What do you know? The two things that kind of keep things moving for the most part. And if those two things are too expensive and inflation is running too high on two main drivers of the economy, what kind of decisions do you think they're going to make in terms of interest rates? To me, it sounds like they're going to continue raising them, continue keeping them elevated. We know from what we talked about earlier that this is having a massive impact on people's life decisions right now. But one of the real problems is we could actually handle all this inflation if people were actually getting the wage increases and the raises that they would need to keep up with the cost of living. But then again, if that were to happen, then we could be in what's called a wage price spiral, where the cost of living goes up, wages go up, and then in order to compensate, companies start charging even more because now wages have gone up. So it just never ends, right? Prices go up, wages go up. Prices go up, wages go up. But instead, what's happening right now is prices are going up and the wages are not going up. In fact, the wages are practically flat or even negative when you factor in inflation. So that is a huge problem for the everyday person right now that's working to make a living and trying to keep up with the higher cost of living. And let's say, for example, everybody who is bullish on the housing market is right for a moment, and that we're going to see the housing market rebound and there's going to be no crash and there's going to be no home price reduction later this year. Well, guess what? All that's going to do is fuel inflation even more, which might mean further interest rate hikes to come after that. So that's the part that people aren't really thinking about here. In order to actually tame inflation, they're going to have to get the price of housing down. It is literally the largest expense that every single person has, including myself. Okay, if I didn't have to pay for a place to live, I would probably be rich by now. And this is also one of the main reasons why people who are celebrating there was no recession and that there is going to be no recession should hold their horses on that, because even if you don't believe that we're in a recession now, then there's no guarantee that we won't still hit one because of these dynamics, right? Because the economy is proven to be more stubborn than the Fed thought, and they might have to go higher with interest rate hikes. All that's going to do is make things worse when it actually does come crashing down. And it doesn't mean that inflation is over. You know, when you hear these numbers like 3% inflation, even if you believe that, if you believe we're at 3%, that still means that the prices, the consumer price index is still going up by 3% each year. Are you getting that amount of a raise each year? How much are they paying you extra every single year? In fact, I think a lot of people don't even get a raise every single year, right? How are people going to keep up with it? That's what I want to know. Now, because of this low inventory situation with the general housing market, one thing we're seeing is we're seeing a ton of people flock to buying a brand new house instead of looking for an existing home, because there is a way more in terms of available inventory if you want to buy a brand new house right now versus if you're looking to buy something like this. Like, how many for sale signs have we seen so far? Maybe just a couple, right? But you can go to a neighborhood where they're building brand new homes and have 30 or 40 different brand new ones to choose from on the spot. In fact, home builders might be the ones coming to the rescue with all of this until home sellers decide it's the right time to sell and their interest rates get to the sweet spot for them. In May of 2023, the proportion of brand new homes, the new builds that sold under the $300,000 price point, went up to 17% of all brand new homes sold, which is the highest level seen since December of 2021. So what this tells us is that home builders are starting to meet the demands of buyers that need a lower price home, okay? Not only are they meeting the demand in terms of the price point that works for buyers, but they're also giving the best incentive. We already know that a lot of home builders will do what's called a buy down, where they will buy down the buyer's interest rate for a set period of time, usually anywhere between 1 to 3 years. But some home builders are actually going to the extreme with this, and they're offering permanent buy downs, meaning that they will offer you a permanent lower rate on your mortgage for the life of your loan, as long as you don't refinance or anything like that. And that is a huge incentive for home buyers right now. That, on top of the fact that the price point makes more sense compared to renovating an old home and getting into an unknown situation, having more to choose from, selection is a big deal. And it's to the point where home builders would rather pay for a permanent rate buy down than cut the price on homes, because when they cut the price, it lowers the value of the entire neighborhood and it causes trouble for them. Even lawsuits sometimes. Now, this listing even tops the last one. It's a for sale by owner, listed for almost $2.4 million. And the crazy thing is, they bought this house back in 2016 for $2.3 million. So only $100,000 more than what they're trying to sell it for today in 2023. Show me another example of that any other part of the country, guys. That is kind of insane. So what this tells me is people kind of overpaid for real estate in this neighborhood dramatically back then. It's either that, or this area has become so undesirable that they have to sell at these prices because people don't want to live here, maybe due to the homeless situation and the crime that has been a problem over here, and that's why the real estate values are tanking here. Either way, these people are basically losing money. So literally, now that we know that home builders are actually offering some buyers permanent rate buy downs, they're just as guilty in helping prop up this housing market as the government, because they're opting to give someone a lower monthly payment than reduce the sales price on that property. But we know that a lot of builders are still reducing the sales prices anyhow. This is not across the board that all of them are doing this, but I didn't even know until I read this that some home builders are actually offering permanent mortgage rate buy downs, guys. So I would definitely tell you that if you are in the market to buy a house right now and you're considering a new build, see if they'll do this for you, because that can be your golden ticket to having a sustained low payment for the life of that loan. And that's a huge advantage to have in today's market. And check this out. 30-year mortgage rates are at 7% right now. Well, these buy downs can actually increase a home buyer's purchasing power by $100,000. So this is great news for the home builders, because that means that they can get you into a more expensive home. And don't forget, when you buy a more expensive home, your property taxes are going to be higher than if you were to buy a cheaper home. So as a potential home buyer out there, don't forget about this important fact. But like I've been telling you guys, the biggest mistake that a lot of people think that they can do, and a lot of new home buyers make, is they think that they can always refinance later down the road. And a lot of them who are getting into these rate buy down situations with the home builders are anticipating the same exact thing. In fact, there was a couple out of Salt Lake City, Utah, that just bought a $600,000 house from Ivory Home Builders, and that's their plan. They opted to get a 2-year buy down, okay? And after 2 years, that means that their interest rate is going to go back up to what it is right now at 7%, okay? And when that happens, their plan is they want to be able to refinance that property. Problem is, if the home price goes down and the value goes down in the next 2 years, which is pretty likely to happen from all the economic indicators we're seeing, they're not going to be able to refinance. And even if it doesn't go down and it stays flat, they might not even have the equity to refinance, because they're not going to be building much equity over that 2-year time frame. So this is the thing that people need to think about. And that's why I'm here making these videos and repeating this over and over so people understand how this works. And this is a quote from this couple. They said, "I'm hoping we made the right decision. I don't know if it was the right time to buy, but rents keep going up." And I get that, guys. Like, that was one of the main reasons that pushed me into buying. And you know what else is interesting is these home builders are able to offer these sweet deals because they made so much money during this run-up in the housing market. They pretty much stopped working with real estate agents. They were price gouging people. And now that all that's over with and they were able to pretty much rake in record profits, that's what's allowing them to be able to offer these permanent buy downs or temporary buy downs or price cuts, free upgrades on the house, all these different things that they're giving people right now. I'm not telling you it's a bad thing to buy a new house, guys. Like, just make sure you get it inspected, because we've covered some horror stories on the channel here about what can happen if you don't do that. And these new home builds are not always what they're all cracked up to be. So you really have to make sure you get the home inspected before you buy it, because there's a lot of shoddy workmanship out there, and they might not live up to what you were promised. Now, I hope you guys enjoyed walking through the Venice canals as much as I did. It's a pretty cool place to do a video here. Definitely went above what I was expecting in terms of cleanliness and, the safety rating of the area, so to speak. So definitely was pretty cool. So if you guys enjoyed this video, please make sure you subscribe to the channel. Please make sure you give this video a like. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.